Hello, and happy Thursday, community. Welcome to today's community event on this beautiful Thursday. Welcome to the YouTube live stream. We are very humbled and pleased to have you here with us today on another community event. Welcome. We are looking forward, as always, to these events as they give us the opportunity to interact, to socialize, to build each other up, to be on top of current events, to be informed, educated, and inspired, and most importantly, for all of us to be able to be on the same page, have a purpose-driven mentality, and understand the challenges that we see in this space, but we turn those challenges into opportunities and those opportunities into solutions using the latest technology known as the digital ledger technology, also known as the blockchain technology. And this is what we are all about, is to taking advantage or making use of this latest technology and finding ways how to add value using smart contracts, using this digital ledger technology to benefit all of us. So with that said, community, as always, welcome to all of us. Those that are tuning in for the first time, we are very humbled to have you here with us. Feel free to follow us on Twitter, subscribe to our channel here on YouTube. We are a very active community. We have daily events, weekly events, recurring events. And as you see today on YouTube, we are active on YouTube on Thursdays. And then we have daily Zoom sessions as well, every single day. And then we have Twitter sessions, X sessions on Saturdays and on Mondays. And then we do have Facebook Lives as well on Wednesdays. And then Fridays and Sundays, we have for the Queens exclusively sessions as well, mostly on Zoom as well. So as you see, we are a very, very highly engaged community. And one of our 4 pillars that we stress on so much, and the whole purpose behind all these sessions, is education. We understand that there's still a very large, or rather tall, learning curve for us to learn, especially in these early stages of this industry. And in order for us to be informed, for us to be level-headed, for us to be making rational decisions on our own, we need to be informed, educated, and understand the basics of macroeconomics that affects us directly or indirectly as an industry and as an ecosystem. We need to understand how inflation directly affects liquidity and how liquidity affects boom or bust cycles. We need to understand our monetary system that we are on right now. How does it work? How does it affect us? And then look at the challenges that we face right now in the industry, in the crypto industry, and then find out how can we add value to it? How can we turn these challenges into opportunities? These are our thought processes as we grow through these community events, as we go through these weekly, daily events. These are what's going through our minds all the time, is to bring different ways or highlight different ways how our ecosystem is addressing the challenges we are faced with in this industry, and how we are turning these challenges into solutions. So if you're here for the first time, feel free to be part of the movement, even if it's just for your education. If you're new in the industry, even if you're a veteran, tune in to these sessions. They're free. No any monthly subscriptions required. We're not selling any online courses, nothing. It's free. Just tune in, listen in, be part of the community, and be part of the movement. That's what we are all about. And also, for those who are consistently with us, of course, we appreciate you as well for always tuning in and being part of these sessions as well. This is not your standard in the crypto space, not at all. This is something that literally sets us apart as a community, and we are very proud of. Another thing we are very proud of is our daily tweeting community events with tweets. And this is exactly what I want to also encourage us, for those who have not yet. All tweets are out, Killer Whale, Survivor, and Bull Run. Why are we doing this? Like we said, it's part of the educational sessions. It's part of the bringing awareness, and it's also part of building the decentralized community like we have, and also growing and building on the network effect that this technology brings along with it. With all that said, as the title already gave it away, tokenization, solution to debt crisis, right? This is something that is beyond just the crypto industry. This goes deeper than that, right? And as we will see as we progress throughout this session, we are really going to highlight. We always talk about and touch on importance of tokenization, and it's good to see that these points are starting to be talked about more broadly on various social platforms, and this is great. It's being brought to awareness, but we really want to pinpoint and highlight how does that really affect us? How is this really, how is the tokenization really a solution, right? Is it fully a solution? Is it just partially a solution? And what does it mean to us? What does it mean after all? And how can we be part of it? How can we take advantage of it? How can we be in front of it, right? And benefit from it? These are all questions that we are getting ready to answer as we progress throughout this session today. So we are going to go right into today's session. So those who already have commented, and I see your comments already lined up, we'll come back at the end and we'll go through every single line of your comments. And if you have any questions, any feedbacks, we'll go through every single one of them and acknowledge your engagement. So bear with me as we kickstart today's session. There is quite a bit to cover, community. So let's sit comfortably and let's tune in, as there is quite a bit to cover in today's session. Tokenization is a buzzword that is really buzzing right now, right? It's in everybody's mouth right now. It's easy to mention it, but let's break it down into bits and pieces to really understand what does it really mean, what is it all about, how does it affect us, how can we take advantage of it, and how is it moving forward going to affect the industry, going to affect us as an ecosystem, and more importantly, how is it going to affect and address the global debt crisis, right? More importantly, in regards to the largest economy in the world, the US debt crisis, right? These are very important things that we always hear just negativity about it, and we hear all this noise about it, but what's the solution? So hopefully by the end of today's session, we'll have a clear way, clear solution, clear roadmap, blueprint for us to follow, and just to be optimistic about the future, what's coming, and let's move forward right now. So as always, I always like us to first begin with an overview of the market. We can look at that at the coin market cap, right? We can come here and see what's happening. It's really flat. We are right at 2.84 trillion. Bitcoin is at 87,000 as we see right now. Ethereum is at 2,000. There's really not much going on, to be honest. What I always want to pay attention to, and I urge us to do, is the fear and greed index is at 33, so it's fearful, right? It's fearful. There's quite a bit going on this month and the upcoming weeks, but as we progress throughout this session, we're going to highlight as we move along so that it makes sense. So now that's all that I want us to look at here at CoinMarketCap. We know that this industry is very sentiment driven. Any little tweet or any message, anything can trigger it on the upside or the downside very easily. This is why it's important for us to always be up to date on current events, what's happening, so that we are aware of why does the market move like this? What's triggering the market to move in certain ways? It's important for us to be aware of these things. So let's get right into today's topic, right? Let's jump right into this. So whenever we read articles like this, or I should say tweets like this, it always should provoke, it should be thought-provoking, right? It should trigger us in a positive way. Like, why is the United States suspending financial contributions to the World Trade Organization? That's one of the largest organizations in the space. Many large economies are participating, and the US has always been the largest participant, being the largest economy in the world. Naturally, US and China have been literally taking charge over here, right, with the World Trade Organization. So this should trigger questions, right? Why is this happening? Why is the United States suspending financial contributions? If we see this, if we read this, let's have this as our blueprint. Let's keep this question in the back of our minds as we progress throughout this session. Keep in mind, tokenization, solution to debt crisis, right? So the US just suspended financial contributions to the World Trade Organizations. Why, right? Always ask yourself, why? Why is that the case? Well, the most obvious answer is right in our face right now, right? So this is public information. We can go, and this is the reason why, right? The national debt right now. And this is up to date, and it counts every second. It's going up every few minutes, every few seconds. You see how it's going up, it's increasing. Right now we're at 36 trillion, right? 36 trillion. This is national, US national debt right now, right? And if we were to divide it based on the US population on every individual, that will be over 100,000 for every single person in the US, right? So every single person in the US would have to pay over $100,000 right now. And there is a population is over 360 million right now, roughly, give or take, 360 million. So every single one of those 360 million residents or citizens in the US would have to come up with over 100,000 to cover this cost, right? That's easier said than done, as we're about to experience. So America's growing debt is the result of simple math, right? We always like to make things so complicated, but actually the details is in the little things, right? It's actually very straightforward and it's very simple. So each year there is a mismatch between spending and revenues. Really straightforward, right? So every time, the way economy works is that you have assets on one side and then you have liabilities on the other side. And assets is revenue, right? This is how you generate revenue. Usually governments collect majority of it is through taxes, right? So it's taxes, and then it's through goods and services that the country provides in any other ways, and all other investments that the governments are involved with to generate revenue and have income. And then they have a set budget or set liabilities that they have to cover, right, throughout the year. Expenses, that's usually paying back the interest rates, the debt interest, just paying interest on the debt. That's social and social security. That's Medicare, Medicaid. That's the military budget, so on and so forth, right? That every government has to pay. So when there's a mismatch between spending and revenue, then this is how the debt just keeps spiraling out of control. It just keeps increasing, right? Very simple, very straightforward, really nothing to it. And if we always like to look at history, because most of the time, if you really want to learn, mostly you just have to learn history. Just go back and look at in the past. And if we look in the past, this is a beautiful chart that just shows us back in 2007. Since 2007, and we're in 2025, so for 18 years straight, this debt has been just increasing, steadily increasing, right? Over time, this has been just increasing over time. It's spiraling, and this is being compounded, right? Queen Val and Queen Debbie had a beautiful session, and they posted it also on YouTube, about the power of compounding and the power of it's very important, right? And you want compounding to be your best friend. You don't want it to be against you. So how is it your best friend and how is it against you? If it's debt, something you owe and you have to pay back, that's where the compounding effect is literally against you. And it's really hard to get out of it. If your debt keeps compounding, this is the chart. This is how it will look like, right? It just keeps, you can't pay back the full amount. So there's an interest rate associated with it. So it's compounding. All you can manage to do is just pay the minimum interest payment, and the rest is just being compounded annually, and it just keeps growing and snowballing, and it becomes massive and massive, as you can see, right? So this is just to lay the foundation of where we are right now. And this is also why, to just explain, if you see articles such as this or tweets like this, you see why. They have to cut costs anywhere possible. With they, I mean the US. So when you see this, you understand that, hey, they're just trying to save costs and cut costs anywhere possible. And they are trying to stop the bleeding, because the debt crisis is real. And if they don't do anything about it, it's going to be critical, right? I always like to, this is a great source, but I always like to be critical, right? Because let's not just use one source. Let's look at another source. And let's understand, to just bring home the point and understand the impact of debt, right? And how governments are dealing with debts. So let's just briefly tune in for the first few minutes just to set the stage and understand the impact of debts and how this debt crisis is affecting not just the US, obviously, as the largest economy. US being affected, it affects everybody else, obviously, because US stock market alone is more than half, more than 50% of the rest of the world, right? So 75% of global liquidity ends up in the US stock market, right? Because it's just the most liquid, it's the largest economy. Naturally, this is where all the money comes to, whether the bond market, the stock market, you name it. This is where it comes to, right? So let's just briefly tune in just the first few minutes to set the stage and to verify what we just discussed for the last few minutes, just using a different source. Let's be critical. Let's always have double check and triple check our facts, right? So let's tune in real quick.
Government borrowing is the biggest issue in finance today.
Governments around the world are addicted to debt.
The sovereign debt levels globally have just grown exponentially.
In the case of the developed countries, the average ratio of public debt to GDP is now back to where it was in 1945. That's rather striking.
It's politically impossible to solve.
Exploding debt is a real worry. If you're an investor, you start wondering what's going to happen and whether there's going to be debt default.
The music stops when you get a major crisis.
The big question is, at what point does the bond market break?
We just don't want the bond yield to get up to a point where it crushes the economy, because then the bond vigilantes will have taken their vengeance.
A determined central bank can always override any market pressure.
I think bond investors should be terrified.
So community, now that we've had that, we understand that literally it's a crisis, right? We had that it's literally politically impossible to stop it. And it's something that is literally affecting us globally, regardless of the markets, of the government that you're involved with, of your region you're in. This debt crisis affects all of us, right? It's something that we have to deal with, and we are dealing with right now, has to be dealt with as we speak. So this is why when you see governments making radical moves, it's because it's time. It's literally time to make moves. And the reason why I wanted us to tune in and just listen in for a few minutes is to really understand and set the stage that this is something that governments they're using the word addicted to. And not just that, this is the monetary system we're in. It's a debt-driven monetary system. So what do we expect? If you're on a debt-driven monetary system, naturally, to stimulate the economy, you have to increase debt, right? You have to raise the debt ceiling, as we will see shortly. If you don't do that, how will you provide liquidity to stimulate the economy? And if you do so, you're causing inflation. So it's like a spiral, something that spirals out of control. It's unsustainable, right? It causes inflation. You lose purchasing power. You have to keep raising your debt ceiling. This keeps compounding in interest over time. And then you see the chart, how it just kept going up and up and up. And the longer this is taking place, the larger the debt. And before you know it, it will get out of control, right? So this is just to highlight. This is another one. So debt crisis deepens, right? This is what we're talking about. There need to be debt ceiling always has to be raised. This happens annually in the case of the US specifically. This is the challenge that they're facing right now, right? So if the US doesn't want to risk US default, right? There's a deadline that is coming on. Just 2 weeks ago, let's scroll down here. Just 2 weeks ago, there was an extension. So on March 14th, the extension took place until June. What extension is that? It's because, like we see here, unless Congress suspends or raises the debt ceiling. Remember, we discussed how the monetary system works that is debt-driven. You always have to keep raising the debt ceiling, because once it reaches that ceiling, you have to renegotiate again in Congress, right, through the different parties. And it's very political. And then you have to raise the ceiling again, and then so on and so forth, right? So it's due again. And this debt ceiling needs to be raised again because it was hit already. And during the Biden administration, it was already hit, right? So they had to suspend the debt limit until January 1st, 2021. And this already hit it again. And this is why it was extended again 2 weeks ago, March 14th, until June. But now it's time to set it again, lift it again, right? Because what we just said, simple math, the income, the revenue is less than the income that they receive. So that means they have to do what? They have to do this again, right? They have a massive problem right here. And this is to get the Senate counterparts on board with a massive $4.5 trillion budget. So this is what they want to add. This by how much they want to raise, right? So they want to raise the debt ceiling by $4 trillion US. $4 trillion US, right? So just to put this number into perspective, if this 4 trillion was a country right now as we speak, let's look at it. Let's take advantage of YouTube. We can share screen, right? So first of all, what are we looking at? This is GDP by country, right? GDP stands for gross domestic product. It is the total monetary value of all goods and services produced and sold within a country during a specific time period, typically 1 year, right? So this is all the monetary value of all goods and services produced and sold within a country. So 4 trillion is just to raise the debt ceiling by 4 trillion. Here on your right side, on your left side right here, you see the GDP. Let me highlight. This is the GDP right now, right? But this column is GDP. So if we scroll down and we go to 4 trillion, so 4 trillion will be right just behind Japan, head to head with Japan. So the 4 trillion that is being raised in the US just to cover interest rate costs and basic needs, it will be in the top 5. If it was a country, it would be in the top 5, right above, between Japan and India, right? It will be right above India. Now look at India. India has 1.4 billion in population, like you see here. It's one of the most populous. It actually took over China. It's the most populous country in the world. And this 4 trillion, and not even India has an output of 4 trillion, only 3.5 trillion, as you see here. So a population, the most populous country in the world, is putting out 3.5 trillion in the whole year, all the goods produced, monetary goods. But the US is just going to raise this just within the next few years, right? Just raising it within a period, 1 year period, is going to be raised. This is what we need just to put it into perspective. So if it was a country, it would be right between Japan and India. It would be above India, right? So that this is just for us to understand what these numbers mean. I always like us to make sense out of things, right? Because if we understand things, we'll appreciate it more and it will make more sense. So now that we understand the impact of the debt, raising the debt ceiling by 4 trillion, it just gives you an understanding how large that number is, that the most populous country, India, in the world, is not even putting out this type of revenue in a whole year. So that's the type of money we're talking about here that is being raised by, right? This causes heavy inflation, community, right? This is going to cause an amount of inflation. It's going to dilute the dollar. It's going to cause inflation, right? But let's go beyond that. Americans have also medical debt crisis, right? So it's debt, medical debt as well. So Americans owe 220 billion in medical debt. So what does this mean? It means that Americans borrowed an estimated $74 billion just to cover medical expenses, right? And this is according to the West Health Gallup survey. What does this mean? So individuals are forced to take on credit to cover their medical bills, right? And it's up to 74 billion right now. They borrowed 74 billion right now. And in total, they're owing 220 billion in medical debt. Once more, this number doesn't tell us much, right? It doesn't really tell us much. So let's go back to this chart. And keep in mind, this is 220 billion. So let's scroll down. These are trillions. Let's go all the way down, right? And before you know it, we hit 200 trillion, 220 trillion. So we know that Qatar has one of the largest sovereign wealth funds. Qatar is one of the largest oil producers in the world right now. And their GDP output is 213 billion, right? But right now, the US owes more than what Qatar, one of the largest oil producers in the world, and Kuwait, one of the largest money market fund. They're actually the first one to have a sovereign wealth fund. Kuwait and Qatar. These are all oil-rich nations, right? And they are having the US is owing more on medical bills alone than Qatar's output, annual output, GDP. This is just for us to have an understanding of the impact that this has. These numbers, we're just comparing so that these numbers make sense, right? The impact of this. So an entire oil-rich country like Qatar or Kuwait doesn't even have revenue in a whole year, doesn't make as much in revenue like the US owe just in medical bill alone. But it doesn't stop there. There is more. If you look at household debts, right? This is strictly for auto loans like car loans and credit cards. We're looking at 18 trillion US dollars. 18 trillion. Let's go back to that chart. 18 trillion. Now we have to scroll all the way up because now we're talking about trillions. So now, if we look at China, China is the second largest economy, as you see here, right? You see here, China is the second largest economy. And even China only puts out 17.8 trillion. This is how much China's producing. We know China is the global manufacturer. Everything, probably even the phones we are tuning into on right now, and the clothes we wear, the shoes we wear, things we drive, or whatever we're using on a daily basis is made in China. And they're the global manufacturer. But not even they have 18 trillion. Like you see, it's 17.8 trillion, right? So just to put it into perspective, the US alone, people who owe car loans and credit cards is more than what China, a country of 1.4 billion in population, the global manufacturer of the world, is not even putting out 18 trillion, only 17.8. So if this debt was a country, it would be above China, which is the second largest economy in the world and the most productive country in the world. This is how much the US just owes in car loans and credit card alone. And these are compounded. So another thing that is shocking is this debt increased by 93 billion just within 3 months, right? Just within the last quarter alone, the fourth quarter, this number went up by 93 billion. Let's go back again. 93 billion. How large is that number? If we scroll down here and look at 93 billion, again, that will put number 70. Costa Rica is the 70th right now, based on GDP, 86. So 93 billion, if it was a country, it will put that country within the top 70 in GDP. So to just make sense out of this, within 3 months, the car loans and credit card debt increased by 93 billion. That's more than Costa Rica's entire GDP. Luxembourg, one of the richest countries in the world, in Europe, Luxembourg, their GDP is less than just 3 months worth of interest increase in debt. Sri Lanka, right? We can go on and on. African nations like Tanzania, Cote d'Ivoire, Ghana, which has one of the most gold in the countries, mineral rich, but they don't even put out. They only put out 76 billion. Why are we highlighting this? It's just to make sense of these numbers, because if we just throw out numbers without showing you that chart with the nation's GDP, it won't really tell us much. It won't really make sense. But because we want to understand the severity of the debt crisis that is happening in the space, this is the reason why we do this, right? So this is severe, community. This is very severe, and I want us to understand that. So all in all, it comes to 18 trillion in car loans, credit card loans, and mortgages, right? Comes to 18 trillion. This is severe. This is massive, community. And it goes even deeper. If we look at developing nations now, because we saw that developed countries are already in debt, right? But now developing is the same thing. They're owing 11 trillion right now. And that's 99% of the export earnings, meaning that they owe just as much. Actually, they owe just as much as they are spending, right? And this is something that is very important for us to understand, that debt can be your friend or your enemy, right? And if you're the one owing it and you can't pay the full amount and it just keeps compounding, this is exactly what happens. You see this chart from 2004 for the last 11 years, this has just been steadily going up. It's a debt spiral, and you can't get out of it. This is devastating. This is disastrous. And this is the situation we find ourselves in. This is our current monetary system. It's debt driven. So what else do we expect? It's going up and to the right, and there is no end to stopping it, right? And this is where we are. And another thing I want us to look at here is that all of these things that we've been discussing, if you think the current outlook is bad, just wait until the White House can't find anyone to buy its debt, right? This is Ray Dalio. He is warning. And so far, what we've been discussing, it's been terrible. We looked at all these things. It's been really devastating, right? But this is not to discourage us or to create fear, but rather this is for us to look at this as a challenge, and then turn this challenge into an opportunity, and turn this opportunity into a solution, right? Everybody can talk about the challenges. Everybody can talk about how bad the situation is, how disastrous it is, and what's happening is about to crash, and so on and so forth. But it's hard to find somebody that comes up with a solution, right? We can all read, we can all see that this is horrible. We can all see that these are challenges that are really tough to deal with, and that needs to be addressed. We all see this, but now what's the solution? How do we move forward? So let's understand this first of all. So the GDP, the debt to GDP ratio of the US right now is 122. This just means that whatever they're producing, like we saw, GDP means all the goods and services a nation is providing within a year. It's less than what they owe. So what they owe, the debt is higher than what they put out in a year. This is with the US right now. So the US faces an imminent debt crisis. Not just the US, there are major other countries as well, but US is affecting everyone because it has the largest bond market, the largest stock market, the largest real estate market. It's just the largest economy overall. So whatever happens to the US, and on top of that, it holds the global reserve currency, the US dollar. So it's affecting every single one of us. And we need to understand all these things that are happening as well, so that we can appreciate and identify the challenges in the space, and then turn these challenges into opportunities, and use this as an opportunity to create, to develop solutions, right? So now that we've seen this, there's one more thing that I want us to look at here. One more thing I want us to look at here. So there's, like we saw in the other chart, by 2054, this will reach 166% debt to GDP ratio, all of that, right? But what I want us to really see here is this. Okay, exactly. So there's a very severe supply and demand problem, right? This is exactly what we need to understand. The supply and demand. So there is a big supply in printing. Whenever an economy or government prints fiat, there is an oversupply. And the demand should come for the bond market, right? Bonds are when governments issue debt. And there should always be a demand, more demand than the supply, right? So whenever government issues debt, it should be bought up immediately. But right now, with the current situation, like we just saw, the housing, the mortgages, the credit card debts, the medical debts, the US is just over-debted. Not just the government, but the citizens and residents as well. So this doesn't bring much courage, right? A lot of people don't want to, are second guessing. Do we really want to purchase the US debts, US bonds? Do we want to do this? Because it doesn't seem that it's as safe like it used to be before. So this is something that we need to ask ourselves, right? So another thing that I want us to understand here is this. Situation lesson, people just... Okay. So as always, if we look at history and see it will repeat itself, right? What do countries do when they're in this kind of situation? There's a lesson from history that repeats, right? Just as we are seeing political and geopolitical shifts that seem unimaginable to most people, if you just look at history, you will see these things repeating over and over again, right? So these are things this is why we always say, always look back, and you can learn so much from the past. Look at what happened in the past, and there's nothing new, right? And these are things that we need to just understand what happened in the past, and then we'll be able to see what others did, right? What others did and how did they go about it. So now the last thing I want us to look at is this right here. So that will continue that at some point, the US will have to sell all quantity of debt that the world is not going to want to buy, right? And this is an imminent scenario of paramount importance. So why are we saying this? Because a lot of, usually it was Japan and China used to be wanting to buy these, right? This is what's happening. The most important thing about debt for people to keep in mind is you need somebody to buy it, right? This is very important, community. If you have bonds, treasury bills, you need somebody to buy it. Who is going to buy it? So we used to be able to count on China, right? Japan, and the Fed. All these players are slowly going away and are actually selling. So China is selling, Japan is selling, Feds are not buying. All those players are slowly going away. So we need to keep in mind who is going. Somebody needs to buy these bonds. Who is going to do this? Usually this is where the story ends, right? Usually this is where the story ends and people just complain and okay, this is going to happen. We're going to go beyond this and highlight who is actually going to buy it. So this is where usually the story ends, but this is where we take it from here. Let's understand that who is this somebody that is going to buy US bonds? China is selling, Japan is selling, right? And all these players are actually selling, right? They're actually selling now. So who is this somebody that is going to buy? This is the question we should ask ourselves. And this is where we get to stablecoins. This is where we get to stablecoins, right? Who is going to buy debt? Who is going to take on that burden? And how are we going to address this global crisis? And how is tokenization going to be the solution to the debt crisis? This is where now we take it to another level, to the next step. This is the solution part now. We've talked about the crisis, the disaster, doom and gloom, but now the sun starts shining. And let's understand where we are right now. So this new tweet right now, this just happened today, a few hours ago. Circle is the parent company of USDC. Circle is the issuer of USDC, and they also spent and bought USYC. USYC is a competitor to BIDL token, right? It's a tokenized treasury bill, as we'll see it shortly. I'll show it in the chart. So anyway, Circle just made a partnership. They have a memorandum of understanding with the parent of the New York Stock Exchange. They're known as ICE, right? ICE. And they announced an agreement that they're going to explore product innovation using USDC stablecoin and USYC. The difference between USDC and USYC is that USYC is actually giving you yield. They're literally you earning yield. When you hold it, they're sharing their yield with you. So it's a yield-bearing stablecoin, right? So stablecoins are officially entering the next chapter in TradFi. Let's understand this even more, right? It didn't make much sense. So let's understand the impact of this. So This is, first of all, is infrastructure. USDC right now is working, Circle is working on building an infrastructure, right? And this infrastructure can improve the capital efficiency and safety of capital markets, which is the bond markets and all other markets, financial markets as well, while unlocking new capabilities only made possible. The keyword is only made possible through, here we go again, tokenization. Tokenization and programmable money on chain. It's only made possible through tokenization. This is it. This is how you do it. Now, with the integration of USYC and USDC, we are fostering a world where yield-bearing collateral can be instantly converted into cash for margin and derivatives trading. We all know that the derivatives market is over $1 quadrillion US. The largest market, depending on where you get the data from, give or take, $1 quadrillion market. This is where it's heading. Now, you have a yield-bearing collateral. We all know that the largest collateral network is made by JP Morgan. They already have their collateral network on Ethereum. So they have this covered, and they're using this collateral for the derivatives, for derivatives trading, over-the-counter derivatives trading. We already know this, so we're not going to touch on this during this session. What we're going to focus on is that yield-bearing collateral are in high demand right now. They're in high demand, and we're not going to take their word for it. We'll have to verify, like we always do. This is nice, but we have to verify. Let's look at it from a different source as well. Is this really true? Are yield-bearing collateral or stable coins, are they really in demand? Let's check that out. Before we go there, I just want us to look at what USYC is. As you see here, USYC is the same like BIDL, right? The number one. Number one is BIDL, like we know. It's a tokenized US Treasury, like you see here. It is at 2 billion roughly already market cap. It's a tokenized treasury bills, like we say, right? It's the tokenized version of US debt that they offer as a product to be purchased. And remember, the challenge right now is the global crisis. So who is going to buy this? Remember the question that Dalia was asking, who is going to buy US debt? China is running away, Japan is running away. We see the situation in the US with all the car loans, mortgages, credit card loans. The government itself is at 36 trillion. Right now, they try to raise the ceiling for 4 more trillion. It's going to be 40 trillion. They still have to pay interest on it. Interest rates are still high, so on and so forth. So who is going to buy this? And this is the solution now. This is where BIDL comes in. This is where USYC, or also known as Hashnote, comes in. They're all tokenized assets, tokenized US treasuries, as you see here. And they're the ones going to bring demand for the bond, demand for US bonds. They're the ones going to purchase it. And it's going to be led by stablecoins. And this is why you saw it's USDC partnering with the New York Stock Exchange, and they want to use USDC stablecoin and the yield-bearing version of it here, the third. Also, the same thing like BIDL. These are the drivers. These will be the drivers that bring demand. So asset managers and financial institutions will be the ones purchasing US debt, because they'll be the ones being able to purchase and issue their own stable coins. And they'll be required to purchase either BIDL or USYC, because these are the tokenized versions of the treasury bills. You see where we're heading with this. This is why tokenization is key, and tokenization is going to be the solution to the US crisis and the global debt crisis globally, right? And US specifically. And just to bring this home, ICE just stands for Intercontinental Exchange, right? It's a leading global provider of technology and data. Like we said, it's the parent company of the New York Stock Exchange, which happens to be the largest exchange in the world, right? And Circle, we know Circle is the issuer of USDC, this USDC stablecoin, right? So what happens is that ICE plans to explore using USDC stablecoins, like we said, and the tokenized money market offering, or tokenized treasuries, US treasuries coin. They want to use that to develop new products and solutions for their customers. Their customers obviously are institutions. And this is why this is a big deal. It just happened today, March 27th. It's a big announcement. This is a major move for USDC stablecoin, and its yield-bearing coin as well, which is the tokenized version of treasuries. Why is this good for us? Because one, we are paired with stablecoin USDC, and we have a staking platform that issues USDC. So the more USDC has, the more use cases USDC has, the more utilities USDC has, the more USDC will be in demand, right? And the more it's in demand, the more it's getting used. And that's good for us as an ecosystem, because when you stake your BRL tokens, you receive USDC distributions. And if it has many utilities, is accepted everywhere, it becomes the largest stablecoin, the most reputable, the most regulated stablecoin, then it's good for us as well. So good news for USDC. Its acceptance, adaptation is good for us as an industry and also as an ecosystem, because we are paired with USDC and our staking distributions are also in USDC. So this is why I wanted us to see. And keep in mind, we're still trying to find out why is yield-bearing collateral in such high demand, right? How is this in high demand, like we see here? So yield-bearing collateral, yield-bearing stablecoins, yield-bearing assets are in high demand right now. So let's not take their word for it. Let's really understand this. Let's understand this. So one thing that I always want us to understand is the World Economic Forum. This is where global leaders are coming together in Davos, in a small ski resort in Switzerland, and they put their heads together behind closed doors and come up with a blueprint on how to move forward. So they came together and identified that the world is increasingly interconnected. However, every asset class is traded on a different fragmented pyramid of an aging technology system, right? Meaning it's an outdated technology system. Actually, if we go down here, we see it even more, right? We see that financial infrastructure operates in much of the same way it has for decades, relying on the same message-based system pioneered back in the 70s, right? But this distributed ledger technology can bring our capital markets infrastructure into the 21st century by streamlining and automating manual and time-consuming processes. So this digital ledger technology, also known as the blockchain technology, is going to update the infrastructure for us. Why did we start with that? Because there is a challenge. We love challenges, right? So because of all this, because there is so many different asset classes, commodity, forex, right? Then there is real estate, there is the stock market. These are all traded on different and fragmented and aging technologies. This creates a real challenge for banks and governments, right? Let's focus on the government. Remember, we saw in our last community event that Switzerland, as a government, they already put in law that they'll be using the Ethereum technology, right? Digital ledger technology, only exclusively Ethereum. So we have the government side covered. So this is why today we're just going to focus on the challenge for the banks. So there is a challenge. How can we bring all these institutions, how can we address this? Every asset class is traded on different fragmented pyramid and aging systems. How can we bring them all under one umbrella? This creates a challenge for banks, right? Now, there is a solution for it. There is a solution. And Visa already came up with the solution. Visa introduces the Visa tokenized asset platform. This is the solution, right? It's a new product that helps. Who does it help? Banks, right? We discussed the challenges that banks face. No problem. Visa came with the solution. They're helping banks to issue their fiat-backed tokens, tokenized assets, right? And they're going to help BBVA, is the largest bank in Spain. They're going to create tokens on the public Ethereum blockchain, of course. Of course, this is the standard. Tokenization is on Ethereum. Ethereum is the standard for tokenization. And they're going to, we can expect it going live this year, 2025, anytime from now. It's getting ready to go live. So Visa, as we know, is also traded on the New York Stock Exchange. Does this sound familiar? This is the same stock exchange that just partnered with the parent company of this exchange. USDC partnered with them, and they're producing products. Do you see the similarities? What's happening here? So the infrastructure is here. The choice, Visa already had partnered since 3 years ago with exclusively with USDC anyway. But now the exchange as well partnered now also with USDC, and they're getting ready to produce products. And Visa already came with the platform. Like we said, it's on the public blockchain, Ethereum blockchain, and they're going to use, or rather help bridge existing fiat currencies with blockchain through the Visa tokenized assets platform, right? As we said, this is a new product designed to help financial institutions to issue and manage fiat-backed tokens on blockchain networks. Just to refresh our memories, the World Economic Forum came up with a challenge. They're like, hey, this is the challenge we're facing right now. And then they're giving us the solution. Tokenization could be the solution. They're literally telling us, they're giving us the blueprint. They're telling us tokenization is the solution, right? And governments and institutions are already making moves. Like we saw, Visa already made moves. It's already there. And what is it? What's the business case for tokenization? It's simple: smart contracts and automated processes, right? This is the key: smart contracts. What is the largest smart contract blockchain community? What is the largest, most durable, battle-tested blockchain, smart contract blockchain? It is Ethereum. This is why Visa is betting on it. JP Morgan is betting on it. BlackRock is betting on it. Circle is betting on it. We can go on and on, right? The largest financial institutions are all building on Ethereum, including governments such as the Swiss National Bank. There's a law. They're using exclusively Ethereum blockchain technology. So why are we highlighting this? Why is this so significant? Let's come back here. It's because we need to understand that why is all this so important, tokenization? It's because it's to improve liquidity. It's to enhance efficiency, lower risk, and it should bring demand on a 24/7 market operations. But this will require infrastructural backbone. And this is why this is the infrastructure that we saw here. Let's go back and read this. Remember, we read this. Remember how it said this infrastructure can improve capital efficiency. Word for word. It's talking about efficiency. It talks about safety in the markets, and it's unlocking new capabilities, meaning it's unlocking liquidity. And it's only made possible through tokenization of programmable money on chain, specifically on Ethereum. So these are things that we are being bombarded let's go back again. We are being bombarded with all these tweets, right? All the US suspends contributions, all the debt crisis is spiraling out of control. Look at all these charts, the dollar is going to zero. Look at all these high debt ceiling is getting ready to be lifted up. And all these articles we read how Americans are having medical crisis and they're owing 220 billion in Medicare, Medicaid, and how these households are having $18 trillion in debt, and how in 3 months alone it increased by 93 billion. We can go on and make comparisons like we just did based on these charts right here. We can go on and be doom and gloom, but this is now the solution, community. And it's given us right here. They're even telling us right here, tokenization could be the solution, right? Governments and institutions are already making moves, and it's about smart contracts. It's about automated processes. It's about improved liquidity. It's about enhanced efficiency, risk, lowering risk, and it's about bringing demand, 24/7 demand. And it requires infrastructures. And it goes beyond this. Remember, again, they're talking about the connectivity of blockchain networks. They're talking about using the distributed ledger technology for what? For collateral management. This is what it's needed. This is exactly what's needed. And this is the infrastructure right here in front of our face. Using the Ethereum public on the public Ethereum blockchain, and it is to help the banks issue fiat-backed tokens. This will help them. And how big is the global network? More than 15,000 financial institutions. And across how many countries? 200 countries and territories, right? So it enables banks to issue and transfer fiat-backed tokens over blockchain networks. And this was the challenge that they identified here. This is the challenge that they were facing. Because as we speak, every asset is traded on a different fragmented aging technology system. But now everything is going to be on Ethereum, right? This is the challenge that it creates for banks. And then Visa came with a solution, and this solution is on the public Ethereum blockchain, and this solution is called Visa Tokenized Asset Platform, or short for VTAP, right? So let's move on from here. This is another thing here. Remember, we had to verify. Let's not just take somebody's word for it, because it's easy to say things. Remember this article, it said that yield-bearing, we are fostering a world where yield-bearing collateral can be instantly converted into cash for margin and derivatives trading, right? This is all great, and it said that only made possible through tokenization. This is one article, but let's look at something else. Another tweet here. So this is now JP Morgan. Their forecasts that yield-bearing stablecoins could expand from just 6% to 50%, so half of the market cap, due to increasing demand for interest-generating assets. So if you are an interest-generating asset, meaning proof of stake consensus, like if you're like Ethereum, right? You are proof of stake. People like to earn something. You want to have a yield bearing. You want to have staking distributions. This is JP Morgan forecasting that yield bearing stablecoins and other interest bearing assets are increasing in demand. This is what people want. This is the market. This is not me saying it. This is not Aureli saying it, the CEO of Circle. This is another article by JP Morgan itself. And ironically, JP Morgan, like we know, they have a collateralized network also on Ethereum, as we know, and they also have their own, right? They also have their collateral, a tokenized network. Let's not just talk about it. Let's go there. I always like us to see what I'm talking about. See JP Morgan, they already debuted their tokenized BlackRock shares and they're using it as collateral. Does this sound familiar? This is exactly what we saw is happening. So BlackRock say tokenization money market fund shares as collateral in clearing and margining transactions would dramatically reduce the operational friction and meeting margin costs. So what we see here, what's important here is this. JP Morgan's Ethereum, again, the Ethereum-based Onyx blockchain, and the bank's tokenized collateral network. They already have a tokenized collateral network, and they're using BlackRock's tokenized shares, BIDL token, as collateral. And they're using it for collateral for the derivatives market. Didn't we just read this? Isn't this the reason why Circle USDC just made the deal? This is exactly what they're talking about. If we go back to this article, USYC is a yield-bearing collateral. USDC is a stable coin. That's not yield-bearing. They are fostering a world where yield-bearing collateral can be instantly converted into cash. So they're talking about yield-bearing collateral using USDC and USYC. And then we come here and read JP Morgan and BIDL. BIDL is the same thing like USYC. It's a yield-bearing collateral. And this is why BlackRock's tokenized shares, which is, like we say, treasury bill, is being used as collateral for the derivatives market. And it's on the Ethereum blockchain as well. All of these things are taking place on the Ethereum blockchain, right? Visa is on Ethereum, BlackRock is on Ethereum, JP Morgan is on Ethereum, and so on and so forth. And Circle has partnered with the parent of the New York Stock Exchange to produce even more products because they believe that yield-bearing assets, yield-bearing collateral can be used for as collateral, right? And this is exactly what we saw here. JP Morgan says the same thing. So it's not just Visa saying it, it's not just Circle saying it, it's just not BlackRock saying it, but it's now also JP Morgan. They already have the network, the infrastructures in place. So basically what they're saying is that yield-bearing stablecoins and yield-bearing assets in general are having increased demand, right? So let's not stop there. Let's go deeper. What is a safe haven? Let's understand one thing. What are safe haven assets, and how do you what are safe haven assets, right? Let's understand this. What are safe haven assets? A safe haven asset is a financial instrument that is expected to retain or even gain value during periods of economic downtime. So whenever things go sour, these assets are uncorrelated or negatively correlated with the economy as a whole, which means that they could appreciate in event of market crash. So they are outperforming when the economy is bad. That's when they shine. When situation is horrible, that's when they really shine. This is why they're known as safe haven, right? You go there when the economy is uncertain, when situation is bad, an event of a market crash. That's where they shine. So there are certain characteristics that assets often have that contribute to their reputation as a safe haven. So what qualifies an asset to be a safe haven, right? Let's understand that, because what's the point of just using the word safe haven if we don't understand the characteristics, right, that contribute to their reputation as a safe haven? The number one most important to be even considered a safe haven is what we are all about: liquidity. This is not me saying it. This is this article saying it. Number one most important to be a safe haven, it's liquidity. The assets need to be easily convertible to cash instantly. That's the number one. If you miss on this, forget, you're not a safe haven. You're not considered a safe haven. If you're not liquid, you're not a safe haven. And we'll look at examples of safe haven assets shortly. So functionality is second. So the asset needs to have a use. What's your utility? What's your use? That will continually provide long-term demand. What is it that will bring the demand? What's your utility? What's the solution? What's added value do you bring in terms of solving a problem, solving challenges? What are you solving that will constantly bring demand for this specific asset, right? And then limited supply. What a surprise. What a surprise. So the growth of supply should never, the word here, never outweigh the demand. So this means if you're a proof of stake, you can't have more, you can't cause inflation. You have to have a limited supply. So meaning you have to at least be deflationary. But if you can be scarce and reduce in supply, that's the best. But at least at a minimum, you have to have a limited supply and be deflationary, right? Keep in mind, we're looking at characteristics for a safe haven. Be liquid, have a use, have utility, solve challenges, and then have a limited supply. Be deflationary at least, if not scarce. Now, certainty of demand. The asset is unlikely to be replaced or become outdated. So this means if you're using the latest digital ledger technology, of course, you can't be replaced. It's on chain. You're using the latest technology, the digital ledger technology. This is why the Swiss National Bank is using digital ledger technology. This is why you see Goldman Sachs, you see JP Morgan, BlackRock, Visa, MasterCard, they're all using digital ledger technology, specifically Ethereum. Because how is it going to be outdated? They keep updating it, actually. And the next update, Spectre update, is actually next month. So that's number one. And then permanence. What does that mean? The asset should not decay or rot over time. So it needs to be sustainable. It needs to be efficient. The more it's adopted, the more it's being used, the more in demand it should be. Remember, we always talk about efficient use of volume. This is it right here. This is exactly what it means. Use your volume efficiently. The more you've traded, the more liquidity you should be retaining, the more supply you should be burning, and the more USDC you should be accumulating. If not, you will decay, you will rot over time. So the more you're being adopted, the more liquid you should become, the scarcer you should become, and the more USDC distributions you should be accumulating. Aren't these our four challenges we are addressing? Lack of liquidity, inflation, and efficient use of volume, and then sustainable staking distributions, right? What's your function? We are addressing the four challenges. The Bull Run ecosystem is ticking all the boxes, every single one of them. And this is why we can be considered a safe haven, right? We retain liquidity with every trade. We are addressing the four challenges in the industry. That's our challenge. That's what we are addressing. We have a scarce supply, not just limited, but scarce. We have scarcity, right? How do you bring certainty and demand? Because we're using the latest blockchain technology. We are on Ethereum deployed on it, right? And Ethereum itself, the more it's used, the more deflationary it gets. And then the permanence, meaning that the more it's adopted, the network effect, we're using our volume efficiently. The more volume we have, the more liquid we get. The more supply we reduce, we burn, and the more USDC distributions we accumulate. Now that we understand this, let's look at certain examples now, right? So let's look at examples of safe haven assets. Let's look at them, right? So number one, gold. It's been a safe haven for thousands of years. It's the most battle-tested It's the most known asset. Whenever there is wars, pandemics, market uncertainties, gold is the way to go, right? Number one. Second, like we said, the bond market is the most liquid asset across the world. The most liquid asset, bond markets. This is the debt market, treasury market. We need to understand this. Gold and the bond market. If we come here, community, let me show you something. Remember, gold, commodity, and treasury. Bond market is treasury, right? So, and then let's take the US dollar too, stable coin, right? So gold, commodity, bond market, treasury, and US dollar stable coin. So if we go here, look at the top three. What's the number one asset on Ethereum? It's the treasury, the bond market, right? What's number two here? It's commodity, gold. Where is it? It's only on Ethereum. Only on Ethereum on the far right, you see here, right? Let me highlight it so we see. It's on Ethereum, right here. As you see here, it's on Ethereum, commodities. And then the third one also is USYC. This is also like BIDL. It's also predominantly on Ethereum. And then stable coins right here, we know that stable coins are predominantly also on Ethereum. So why are we highlighting this? Is when we go back here, commodity, smart contracts on Ethereum, tokenized gold, tokenized commodity is on Ethereum. Tokenized treasury bills is on Ethereum. Tokenized dollar is on Ethereum. Keep in mind, these are all safe haven assets that people rush to in times of trouble. And the top three are all on Ethereum, predominantly on Ethereum, no competition whatsoever. Now let's look at the fourth one, yen, Swiss franc, and then stocks are the sixth. And tokenized stocks are also on Ethereum, right? The ETFs, the stock market, tokenization of real world assets, such as the shares, tokenized shares that are about to be issued out by BlackRock and other asset managers. These will be tokenized and they'll all be on Ethereum, majority on Ethereum. So to say the least, because the largest fiat, digital fiat is on Ethereum, naturally the yen, digital yen and the digital Swiss franc are naturally going to be there as well. Let's go to defense stocks. Let's really understand something. I want us to take away something from there because it's very, very interesting to understand what that means. Okay, so defensive stocks describe the shares of companies that are involved in providing goods and services such as utilities, right? Utilities, water, electricity, energy, so on and so forth, or consumer staples such as food and beverages or healthcare. Why? They are considered safe haven assets because they are likely to remain stable due to the constant demand for their products, even in periods of economic instability. The key word here is that they'll always remain in demand. They'll be in constant demand. That's the key. Constant demand is key here. So if you want to understand what safe havens are, is like we said, they meet these requirements. They have to be liquid. They have to have address challenges, right? They have to have a limited supply and be deflationary at least, if not scarce. They have to use their volume efficiently so that they don't decay over time. And they have to have certainty in demand. The assets are unlikely to be replaced or become outdated. If you use the latest digital ledger technology using the network effect, you'll not be outdated. So these are the four challenges, community, that we are addressing. And these are the certain characteristics that assets often that contribute to their reputation as a safe haven. So if you don't have not just one or two, but all of these, you're not considered a safe haven. And I want to highlight another thing. You see here, there is no, this, I'm not picking on any, that's why I'm not going to name any names. The largest stable cryptocurrency is not listed here, right? It's gold, a commodity, government bonds, then the dollar, right? And then the yen, Swiss franc, and then stocks. Cryptocurrencies are not here. And the reason why is because they don't even meet the first requirement, liquidity. They don't meet this requirement. We've discussed this. We're not going to go too deep into this, right? But just to, for those who missed this, let's look at the largest cryptocurrency. Why are cryptocurrencies not listed among safe havens? It's because the lack of liquidity. The miss on the number one most important is liquidity. So if we look at the largest cryptocurrency, Bitcoin, the number one largest, it holds more than 60% of the entire market, right? It's sitting at 1.7 trillion in market cap, 24 billion in volume. It has, if you look at liquidity here, its liquidity is at 1.9. Let's round it up, 1.9. Actually, let's give it even 2. It's 2 billion, right? Let's round it up. Let's be generous. 2 billion in liquidity. So the reason why cryptocurrencies are not listed, but stablecoins are, is because cryptocurrencies outside of stablecoins are just not liquid, and they're not meeting to be a store of value or to be considered a safe haven. How will you be a safe haven if you can't meet the very minimum, the very first, most important, the asset need to be easily convertible to cash at any time, anytime. This is the bare minimum. If your ecosystem is not working towards retaining liquidity, you're missing out. If you're not addressing any challenge, if you don't have no functionality, what are you addressing? What challenges are you addressing? Are you part of a solution? If not, then you're part of the problem. Why is your supply causing inflation? We just saw that inflation is debt. Debt increases. You have to raise your debt ceiling. It's causing inflation, loss of purchasing power. So your supply needs to be at least deflationary so that you're not a copy-paste of the current monetary system that is debt-driven, right? And then what's your certainty of demand? What makes you be in demand, right? Is what makes you in demand if you have enough liquidity, if you're solving challenges, and if your supply is shrinking. That's the demand that you're bringing. And then add that up with efficient use of volume. Now you have yourself a safe haven, right? Now that we understand that, let's go back and understand why are cryptocurrencies not put up there? Because the largest one, Bitcoin, is illiquid. You see the liquidity is at 2 billion. And let's look at 2 billion. Keep that number in mind, 2 billion. So if we come here, we quickly identify that we have a challenge here, right? Because there are 6 Bitcoin billionaires, but there's only 2 billion in the liquidity pool. So this is a challenge, right? So barely 2 can cash out, let alone 6. But now these are the billionaires among themselves. So only, not even 2 can cash out because there's like 1.9 billion in the liquidity pool. Let's go back again just to highlight. There's 1.9 billion. Let's say 2 billion. Let's just say 2 billion, right? So this is the liquidity, 2 billion. So how will these billionaires cash out? Remember, to be a safe haven, to be considered a safe haven, there are certain characteristics, and that is liquidity. This means the asset needs to be easily convertible to cash, and the key is at any time. The keyword is anytime. Anybody should be at any time able to cash out. But As we see here with the largest cryptocurrency, you can't do that. There's only 2 right now, but there are 6 billionaires. But it goes beyond this. What about the ones with just 1 million and above? Let's look at them. So there are 40,000, right, that hold Bitcoin. 40,500 Bitcoin holders that have at least $1 million. So for the math geniuses, this would put us at 40 billion. It's impossible. So none of these 40,000 can cash out. It will take 40 billion, over 40 billion in the liquidity pool of Bitcoin for them to be able to cash out, let alone that we have already 6 billionaires and they can't cash out. Now we have 40,000 millionaires with at least 1 million. They can't cash out either because they need 40 billion. What about the ones that have over 100 million? There's 78 of them. This is another 7.8 billion. They can't cash out either. So this is why cryptocurrencies are not listed as safe haven. They're just not liquid. If the largest one is not liquid enough, don't even worry about the rest, right? So this is why you see here, to meet certain characteristics, you need to be a safe haven. Number one, most important, you need to be liquid so that you can be easily converted into cash at any given time. Number one, you have to have a solution. What are you addressing? What challenges are you addressing? What's your functionality? What's your use that you provide continuously, and it will bring long-term demand because you have that use, right? What is it? Ask yourself that. What does your ecosystem do that will continuously provide long-term demand? What is it addressing? And what staking? How is your staking platform? Is it causing inflation? Is it deflationary at least? Or is it even going above and beyond and it's scarce? Ask yourself that. Now, certainty of demand. Which blockchain are you on? Is your underlying blockchain inflationary, or does it have deflationary mechanisms in place that the more it's being used, the more deflationary it gets? And what about your volume, permanence? Are you using your volume efficiently, or will it decay over time? The more volume you're trading, the more liquid you should become. The scarcer you should become. As you see here, your supply should be shrinking, your liquidity should be increasing, and your staking distributions should be also increasing as well as you're using your volume efficiently. And these are the things that we are addressing, community. These are exactly the challenges that the bull run ecosystem is addressing. So we started this session to highlight tokenizations are the solution to debt crisis. But that's just half of it. The remaining factor is once you tokenize the assets, now to be a safe haven, you have to meet these requirements. Is your tokenized asset providing liquidity? Is it retaining liquidity? Is it addressing challenges? What challenges is it addressing? Does it have limited supply, and is it scarce, at least deflationary, right? Does it bring long-term demand? And is it using its volume efficiently, or will it decay over time? These are exactly the factors and the challenges that our ecosystem is addressing, community. So each time you see us talking about these 4 challenges, now it will make sense, and you'll be able to appreciate our ecosystem because it's developed specifically to address these challenges, to be considered a safe haven when all hell breaks loose and times are tough and all of that. You want to have an ecosystem that you can run to, that you can be part of, that is built to retain liquidity, to reduce the supply, and to accumulate USDC distributions. And it does so by using its volume efficiently, meaning the more trades are happening, the more liquidity it accumulates, the supply keeps dropping, shrinking, from the total supply, and it accumulates USDC. I don't just want to show you this on this website. Let's go and verify on Etherscan. This is what this is all about. So we started with 1 million in total supply, right? I could talk all day, but verify. Don't take my word for it. Let's go to Etherscan and verify. We started with 1 million in max supply. This is max total supply. We started with 1 million. Now, this is Etherscan, as you see here. This is blockchain technology. This is the global ledger. Everybody can come here and verify. This is not just me speaking. This is, you can verify that our supply is now 963,000. So we came from 1 million and our supply is shrinking. Now, keep in mind, what did we read here? What does it take to be a safe haven? You have to have a limited supply, right? The growth of supply should never outweigh the demand. This is one of the criteria to be considered a safe haven. Your supply can't be inflationary, right? So this is the reason why you see that our supply keeps shrinking. The more it's traded, the more it shrinks, right? And also we have a staking platform. You see here this number one wallet here. It's a contract, it's a smart contract. And over 68% of the supply is staked, right? This means there's over 656,000 supply is removed from circulation. So this is something that is removed from circulation. So let's look at the staking contract. If you look at, it says here, it's a contract. This is a smart contract. And it accumulates USDC, as you see here. As I'm highlighting here, you see it's accumulating USDC. Right now it has over 6,400 USDC that it's accumulating. And it comes from trades. Each time we are trading, it's accumulating stablecoin for those who are staking. So you can receive staking distributions. And this is the contract that is accumulating it. So the more trades are coming in, the more USDC is being accumulated for the stakers. So this is not just me talking, but this is on Etherscan. You can come and verify. What are the part of the requirements to be a safe haven? You have to have certainty of demand, right? And you have to ensure that continually in the long term there'll be a demand for this token. So if your token is inflationary, right, it's increasing in supply, and if you're not retaining liquidity and your supply, people don't have enough liquidity, and you're causing inflation, of course it's not going to be in demand in the long run, right? And this is why you need to retain liquidity. You need to shrink your supply as a staking platform, and so that there'll be demand in the long run, right? And then use your volume efficiently so that you should not decay over time, right? So the more it's adopted, the more liquid you become, the scarcer your supply, so on and so forth, right? So this is why we always say, don't trust, verify. Come to Etherscan, check out the smart contract. Look what's happening here. USDC is being accumulated. If we go back here again, the supply is shrinking, as you see here. And this is what we're all about, right? So the supply is shrinking, USDC is being accumulated right here, and liquidity is being accumulated. These are things that are triggered by volume. The more volume, the more USDC distributions, the deeper the liquidity, and the more the supplies shrink. Why are we doing this? Because you want to meet certain characteristics that you have the reputation as a safe haven. You don't see any cryptocurrencies listed here. Even if you tokenize all 6 of them, right? You still have to meet these requirements. You have to meet these requirements. It's just halfway done. To be tokenized is just one thing, but then are you retaining liquidity? Are you having solutions to the challenges Do you have a limited supply, or is it scarce? Are you causing inflation, right? So on and so forth. Are you using your volume efficiently, right? So these are important aspects, community, that we need to understand, we need to address. And to close out, right now, Ethereum is not getting any love, right? And Ethereum has been facing a lot of charges from the SEC. DeFi has been attacked. Consensus has been attacked, which is the parent for MetaMask. Coinbase and Kraken have been attacked because they were offering staking. Right now, even the Ethereum ETFs are not staking enabled. Is not staking enabled. There's so many things that are still not optimal, right? And we're still waiting for the regulatory clarity of stablecoins, of real-world assets, so that tokenizations can kick in, so that Visa and MasterCard's platforms can be onboarding these 25,000 financial institutions and banks. All of this has not even taken place yet. But nonetheless, it's not even, look how little Ethereum is burning. But still, it is still more deflationary than Bitcoin, as you see here on this chart. BTC is orange, Ethereum is blue. And Ethereum, at its weakest point, is still more deflationary than Bitcoin. Before you can stake it, spot ETFs, Ethereum ETFs can't be staked, not yet. Tokenization of real-world assets are not enabled yet. Stablecoin regulations are not even here yet. The Visa platforms and MasterCard platforms are not enabled yet. They're not running yet. JP Morgan's tokenized network for collateral and for the derivatives market is not online yet. And the tokenized assets for BlackRock that will be used over the counter as collateral for the derivatives market are not on yet. But still, at its weakest point, Ethereum is still more deflationary than Bitcoin. So imagine once all those things go online and the burning starts being more burns than even the issuance, and Ethereum becomes deflationary like it used to be. Now we are back to here. Now you have an asset, a yield-bearing asset that you can use as collateral. That's Ethereum for you. That is in high demand, right? So you have a liquid asset that is yield-bearing and you can use as collateral, and it's deflationary at the same time. That's exactly why we say that Ethereum is where to go, and it's the future of finance. It's going to assist with the debt crisis of many nations. It's going to assist and be a very good treasury. Major institutions are going to use it in their treasury management because you have a collateral, you have a yield-bearing asset that is deflationary. You can use it as collateral, and there is nothing like it. And the more it's being used and traded, the more deflationary it becomes, and the higher the yield you get. And this is the future. You want yield-bearing collateral that you can use, right? And this is exactly what we saw here. The partnership is all about with USDC and USYC for the parent company of the New York Stock Exchange. They want to produce new products with the focus of yield-bearing assets. And what is the largest yield-bearing asset that is still more deflationary than the largest asset that has everything going for it? The largest Bitcoin ETF, it has it already. It's a strategic reserve. US accepted it. It has options, futures trading. It has everything going for it. It's literally at its best, but it's still more inflationary than Ethereum at its worst. And this is just to show you that imagine once Ethereum is at its best, staking enabled, collateral enabled for JP Morgan, a tokenization takes full effect on BlackRock, And then all the 25,000 banks and other financial institutions are being onboarded by Visa through their Visa tokenized asset platform on Ethereum, and billions, tens of billions of dollars in volume are being processed on Ethereum. Then we're going to see what's exactly going to happen. And this is exactly what's coming our way, community. What's the bottom line is, you need an ecosystem that is addressing the 4 challenges. You need an ecosystem that in the long run has the characteristics of a safe haven asset, that retains liquidity, that has use case, that is addressing the 4 challenges in the industry, that has not just a limited supply and is deflationary, but is actually has a decreasing supply, is literally scarce. And this, if you retain in liquidity, you're solving the 4 challenges in the industry, your supply is shrinking, you have sustainable staking distributions, and you're using your volume efficiently, of course you have a certainty of demand. Of course, that's what brings demand, right? And the more liquidity you have, the more trades that you get anyway, the more transactions. Transactions and liquidity go hand in hand. And this is what we're all about, right? And this is done from day one, so that we will be able to make the most out of this bull cycle, out of this liquidity rush that we're about to experience, right? So every time you hear about tokenization being the solution for the debt crisis, if you never understood it, hopefully by today, we're all on the same page and we understand how exactly in detail how this is taking place. Everybody can complain. Everybody can listen to the news and read articles, how negative things are, how bad things are. But we are more concerned about, we're looking at those challenges as opportunities. We don't stop at whining and crying and panicking, but we go beyond and take those challenges and turn them into opportunities by addressing them and turning those opportunities into solutions using the latest technology, the blockchain technology. And this is how we're addressing them. Retain liquidity, reduce your supply, shrink it, retain, accumulate USDC distributions to incentivize the stakers, because staking is at the heart of security and stability. If you want a stable ecosystem, if you want a secure ecosystem, you need to work on your staking platform. It needs to have these features, right? It needs to have these characteristics. And these characteristics are also considered safe haven. Liquidity, let's not take this for granted. What's your use? What's your solution? What are you addressing? What are the challenges? Are you addressing these 4 challenges? Lack of liquidity, inflation, unsustainable staking distributions, efficient use of volume. These are the functionalities that you're supposed to have. You have to earn to be a safe haven. It's not just wishful thinking. You need to have characteristics to be considered a safe haven. It's not just given. You need to have them, right? And if you don't meet all of these, if you only meet 1 or 2 or 3, or even 4 is not enough. You need to meet all 5 of them to be considered a safe haven. And we can see the list right here. This is the list. If you didn't make it to this list, you're not a safe haven. You're a speculative asset. And your aim is to be a safe haven. That's what you want. You want to be in this category. And if you're not part of the solution to be on this list, then you're part of the problem and you're just causing more problem and you're not part of the solution. So this is it for today, community. Let's come back to your comments. Let's be encouraged. Let's be uplifted that we are part of the solution. We are focusing on solutions and not whining about the challenges, but we look at these challenges as opportunities. That's where we strive, right? That's how we really strive. We strive in finding solutions. Bear with me as I'm sharing a screen here. Yes, we embrace the challenges. We thrive in the challenges. We're not fearful and panicking and being all emotional about things, but we think clearly. We are rational. We thrive in challenges. We take opportunities, look at them as opportunities, and we find solutions for these challenges, right? This is what we are all about. So let me come to your comments, community, so we can go full circle. Queen Mother Caroline says, a community's strength lies not in its resilience, but in its ability to persevere through challenges, united in purpose and unwavering in its pursuit of a better future. There's really nothing more to add to this. This is so beautifully said, Queen Mother Caroline. And this is what blockchain technology is all about. This is what the network effect is all about. It's all about community. It's all about a united in purpose and unwavering pursuit of a better future. It's beyond resilience, right? It's about the ability to persevere through challenges and turn these challenges into opportunities and the opportunities into solutions, right? Beautifully said, Queen Mother Caroline. Beautifully said, really. Thank you for your feedback. Very much appreciated. Queen Mel says, greetings, family. Greetings to our developers, Mr. Steve and Queen Mom. Greetings right back to you too, Queen Mel. It's always a pleasure having you here with us. We appreciate you taking your time and being part of this session today. Queen Beatrice says, greetings to the Boran family. Greetings to our gracious Mother Wino and to our own Professor Brother Steve. Thank you for taking us on for another informative and educational session. We appreciate you very much, Queen Beatrice, for taking your time and participating consistently. We hope that you are able to take away something from today's session, and we are very pleased to have you here with us today. Queen Mel says, another day again of learning more about cryptocurrencies and our investment opportunities for the future as community. Thank you so much, Queen Mel. It's always a pleasure to see you. I hope you and yours are doing great. We are very happy to have you here with us today. Queen Lati says, greetings to the Boran family. It's another day to have our community teachings from King Steve. Fasten your seatbelts and hear how tokenization is the solution to debt crisis as nations grapple with. Beautifully said, Queen Lati. The stage is set. I hope that you are able to take away something from today, along with all of us in the community. This is exactly something that it's a global crisis that nations are grappling with it. It's not just one nation or two. It's majority of them, right? 99% of nations are going through debt crisis. Developing and developed countries are going through it, right? And this is the reason why we have to change our mind and look at these challenges and turn them into solutions. Understand that we can't just copy paste the current monetary system on the blockchain, tokenize it, and then call it a day. It needs to meet certain criteria to be listed as a safe haven. Are you retaining liquidity? Are you focusing on the inflation challenge? Is your supply shrinking? Is your staking platform sustainable and efficient? And is it deflationary, if not scarce? Ask yourself those questions. Are you using your volume efficiently? These are exactly the things that you need to address. It goes beyond just tokenization. Tokenization is just good for efficiency, transparency, and you don't have to trust, you can verify. But you need to go beyond that. You have to meet those criteria, those characteristics to be a safe haven as well, so that you are an ecosystem where when everything else is burning around us, people rush towards you because you have the characteristics of that safe haven. My great brother Theo says, greetings, happy Thursday, my great brother Steve, dearest great Queen Mama Wino, and my epic BRL family. Really looking forward to this session on tokenization. Thanks again, as always, General. Salute. It's always a pleasure to see you in the community, our great brother Theo. I hope you and yours are doing fantastic. We appreciate your feedback very, very much, and we hope that you are able to take away something from today's session. Queen Lati says the debt crisis, the digital technology has come in to bring a change from the traditional ways to modernized systems. Take us on, King Steve, and stay blessed. Thank you so much, Queen Lati, for your feedback. Absolutely. We often get carried away and we lose focus on understanding that crypto is not about flipping meme coins. It's about using this digital ledger technology to address challenges. And our aim is to fulfill all the 5 characteristics to be a safe haven. Why are you in this space if that's not your aim, right? That should be our long-term goal. Mid-term, long-term goal is to accumulate liquidity to ensure that our staking platform has sustainable staking distributions and it's scarce, not even just deflationary, right? And when you address these 4 challenges in the industry, of course, you'll always have demand for it because people seek safe havens, right? So beautifully said, Queen Lati. Queen Val says, hello, bull runners, and happy Thursday to you, Mr. Steve, and our beloved Queen Mother Wino. Thank you for all you do for us, the hard work and the consistency. Thank you so much for your well wishes, for your kind words. We can only give it right back to you as well, for your consistency and your hard work as well, that you do on a daily basis on Zoom, with all these beautiful banners on a daily basis as well, and all these Wednesday sessions on Facebook, and then all these other sessions during the week as well. Very, very much appreciated. Queen Kube says, hello family. It's that time again whereby our brother Steve takes us on yet another topic, tokenization as a solution to debt crisis. We are all ears to hear what it says. Thank you, Steve. Thank you, Queen Kube. And I hope that you are able to take away something from today's session. Let us know. We hope that that's the case. We appreciate you very much for your consistency, for always participating. We appreciate your feedback. And I'm glad that you're able to make it to yet another community event. Queen Val has posted the links to our Telegram group. So those that are new and are not part of our community yet, feel free to be part of our community. Even if it's just simply to be up to date on current events and be informed and educated, understand how monetary systems work, how money works, how finance works. And none of these are financial advice. This is just for informational and educational purposes. And we always encourage the community to be critical, right? Don't take my word for it, right? Triple check, verify. And this is why we love to use links, multiple sources we don't just rely on one source, but we verify, we triple and quadruple check. We like that, right? So we always encourage you, feel free to be part of our community. Here's the link for Bull Run, for Killer Whale, and we have Survivor here as well. So feel free to be part of our community. Thank you, Queen Val, for sharing the links. Then we have Queen Mother Caroline says, this community is so fortunate to have leaders like Steve and Queen Awino. They go out of their way to educate, inform, and inspire us. We are so blessed. Thank you so much for your kind words, your well wishes, Queen Mother Caroline. You are so much appreciated. What I want to stress here and highlight is that we're just part of the community, and we're just doing our little part that we can on our part, right? And it takes the whole village. It takes every single one of us. It's not just a one woman, one man show. It takes all of us. And that includes you, Queen Mother Caroline. We appreciate you very much for all your leadership, your consistency. You lead by example. You're consistently participating in these events, weekly, daily events. We appreciate you so much. So we appreciate your leadership as well. And we appreciate how you go out of your way and through your leadership and your consistency as well. So we can only give it back to you. And then we have PRL is still alive. Absolutely, not just alive, but thriving. We have Queen Kinole saying, greetings, Boran family, ready to expand our knowledge today. I hope that you were able to take away something from today's session, Queen Kinole. It's always a pleasure to see you in the community. You are very, very much appreciated. Then we have Queen Cynthia saying, greetings, Boran community, another day to be inspired and educated. Thank you, Mr. Steve. Thank you, Queen Cynthia. You are very, very much appreciated. Always a pleasure to see you in the community. We appreciate you as well for all your contributions, your efforts, leaderships as well. We have Queen Resego says, good evening, Boran community. Happy to be here tonight as we tap into the anointing of God from our very own brother, our best developer, King Steve. We recognize you as well, Queen Mom. Thank you so much for your very, very warm, very kind, well wishes, Queen Resego. You know we have to give it right back to you as well. We appreciate you as well for your efforts, your consistency. You're always participating in these events. We appreciate your feedback and for taking your time to be part of this session as well. Thank you so much for your feedback. Very much appreciated. Then we have Queen Grace says, hello, Steve, our Mama Wino and Boran family. Thank you for your tireless efforts to train us and keep us informed and knowledgeable in the crypto industry. More so, thank you for giving us the best. Queen Grace, very humbled and very, very appreciate your well wishes. And we have to give it back to you as well because you are just as impactful. We appreciate all the efforts that you put in, your tireless efforts, your consistency, your contributions to the ecosystem and the community. You are very, very much appreciated for all that you do for all of us and your contributions. And thank you for taking your time and being part of this session. And we hope that you are able to take away something from today's community event. Then we have Queen Rose saying, good evening, Boran family. It's time again. We learn and hear a lot about our ecosystem as our wheel drive to prosperity. Thanks, Mr. Steve, for your tireless efforts to keep us informed always. Thank you very much, Queen Rose. You're very much appreciated for participating, for your consistency as well. Your added value and leadership by example is very much appreciated in the community as well. And then we have Queen Super says, good evening, Boranas, and happy Thursday, listening attentively from our developer, Brother Steve. We are pleased to have you with us. We appreciate you taking your time and being part of this session today. It's always a pleasure. Thank you for your feedback and for your participation. Then we have Queen Debbie. Greetings, Boran community. Greetings to you, my brother Steve, and our beautiful Queen Mother Wino. Enjoying the topic. Thanks, my brother Steve, for this wonderful passion because it's beyond teaching. Thank you so much, Queen Deborah, and you're very, very much appreciated. Thank you for your well wishes. We also have to give it back to you as well. Your consistency, your commitment, your leadership is just unmatched. Also, you take on every Wednesday, you and Queen Vala taking over Facebook and doing the live, educating the community, putting the word out there, educating the community about BRL and what it's all about. All these weekly events on Fridays and Sundays, you are on taking on leadership there consistently. You never miss any community event. You're always participating. We appreciate you very much, and we can see your passion as well, and you're very, very much appreciated. We have Queen Aloshi saying greetings to the Boran family. Greetings right back to you too, Queen Aloshi. We appreciate you very much. We appreciate you taking your time and being part of this session today. Queen Patricia says, good evening, family. Happy to be here listening and learning from our developer, Mr. Steve. Thank you, Mr. Steve, for your commitment. Stay protected and blessed always. Thank you so much, Queen Patricia. Very, very much appreciated. As always, your consistency is unmatched. We appreciate you, your feedback and your well wishes as well. And may all be well with you and your family as well. And we thank you for participating consistently. Then we have Brother Ernest. Says, greetings to you all, my esteemed Boran family, Queen Mother and Brother Steve. We thank God for all your commitment, which is beyond measure. We are privileged as a community to have you in. Thank you for your well wishes, King Ernest. We also appreciate you very much for always participating, for your consistency, your commitment, your belief and optimism, and seeing what this ecosystem is all about and seeing it for what it really is and being part of it consistently. You are very, very, very much appreciated. Then we have Queen Aloshi says, greetings, Boran family. We are blessed to have a caring and informed leadership. Thanks, Dev, Steve, and Queen Mom for the concern. Thank you for your feedback, Queen Aloshi. We appreciate you too for always being consistent and participating in these events. And then we have Brother Chris saying, greetings to our amazing Boran kings and queens. Looking forward to being educated, informed, and empowered. Thank you, Steve, for all you do for the community. We thank you just as much for your feedback. You're very, very much appreciated. Then we have the one and only Queen Mother Wino herself saying, greetings to our awesome Boran family. Another opportunity to be educated, informed, and inspired. Knowledge is power. Indeed, knowledge is power. Indeed. So thank you so much for your feedback. As you create light for others, you naturally light your own way. Think of giving not as a duty, but as a privilege. Thanks, Steve, for enlightening and lightening our path. Thank you so much, Mom, for your well wishes and very, very warm words of encouragement. They're too much for just a single person to bear on my own. I have to give it back to you and the rest of the community. You're all, we are all part of this. We all are contributing to the success of this. And it's never a one woman, one man. It's never a one king, one queen show. It takes every single one of us, right? We all chipping in. We all doing what we can do to our best abilities to bring awareness, to inform, educate ourselves, and to do what we need to do to push forward and to succeed. So thank you so much for well wishes, but I have to give it back right to you as well, Mom, for your consistency. You're here on a daily basis, and you're leading by example. You are very much appreciated as well for all that you do for us as a community. And what better way to do that than, like you say, creating light for others. This is our mantra, right? Add value to others and do it better than anybody else. That's the true path. That's the true blueprint to success and to wealth. And thank you so much, Mom. Beautifully said. Then we have Queen Marilyn here says, great information, Brother Steve. I'm informed, empowered, and educated. God bless you. Thank you so much for that feedback. Very, very humbled, very glad to hear that. And thank you for your feedback. I'm glad that you were able to take away something from today's session. Very, very much appreciated. Then we have Queen Jane says, hello, Bull Runners and our Dev Steve, our lovely Mama Win. I have no words to describe the benefits we receive from you, King Steve. You're God-given. May you be blessed as you focus on educating us more. Thank you so much for your warm wishes, well wishes, and well-meant words of encouragement. Thank you so much. I can only give it back to you as well. You're also very much appreciated. And your contributions go a very long way. Your consistency is contagious. It's a team effort. It takes every single one of us to get to where we need to get. A house is not built by a single person. It takes multiple pieces, and it takes many responsibilities to get things done. And we can't do it on our own. We need each other. We need to do this together. We're all just a piece of a puzzle, right? And we're all just chipping in where we can and contributing to the best of our abilities to ensure that we bring awareness to this ecosystem. We remain informed and educated so that we're not led by emotions, but rather by clear mind, a sound mind, and that we can think rationally and critically. That's the whole point. So thank you so much for your well wishes, Queen Jane. Then we have Queen Azubuike says, greetings to Steve and the whole BRL family. Greetings right back to you too, Queen. I hope that you and yours are well, and I hope that you're able to take away something from today's session. Then we have Queen Esther. She says, thank you so much, our developer, King Steve. I'm learning a lot today. Thanks, Queen Mom, for the opportunity to be here. We appreciate you very much, Queen Esther, for taking your time and consistently participating in these community events. It goes a long way. We appreciate you very, very much. Then we have Uncle George. It's always a pleasure to see you, Uncle George, in the community. He says, hi, Steve, Mama Awino, and the Bull Run community. Our ecosystem meets the fundamentals necessary for guaranteed returns. What we need is to hold on tight as we go through these turbulence periods. Absolutely. Fundamentals are key, and we need to be part of the solution. Beautifully said, and we want to make the most out of this cycle. What better way to do that than ensuring that we turn the challenges into solutions, and we see challenges as opportunities, right? And not panic about them or be confused, but rather stay calm, stay level-headed, take a deep breath, and turn challenges into opportunities, and do it better and add value to the community and do it better than anybody else. So beautifully said, Uncle George. You're very much appreciated for your contributions as well and your consistency. My great brother Theo says, thank you for another jam-packed session. Wow, I got so much out of this one, and I'll be listening to this on loop. We appreciate your feedback and are glad that you were able to take away something from today's session. Thank you very much. Thank you for continuing to educate, inspire, and empower us all. You are very much appreciated. Great one. And thank you for continuing to educate, inspire, and empower us all. You are very much. Thank you so much, great brother Theo. We are glad that you're able to take away something from today's session. Then we have Queen D says, wow, powerful. In the Bull Run life ecosystem, we listen to positive education, not industry noise. We are educated, inspired, and motivated, all thanks to our dev, Steve and Queen Mawino. Beautifully said, beautifully said. Sometimes we just have to tune out and cancel all the noise, right? Because there's really a lot of noise that we should filter out and not be part of, right? And some noise will lead us into being emotional and making irrational decisions, or panicking and being, causing uncertainty, fear, and doubt. And these are things that education filters out naturally, right? Education is power, literally. It is literally. It gives us a sense of peace, a peace of mind, understanding what's happening around us. Beautifully said, Queen D. Thank you for your feedback as well. Then we have Queen Nancy. Thank you, King Steve, for taking time to educating us. Very informative, inspired indeed. Knowledge is power. Absolutely. And this is the best way to summarize this session for today. Community, once more, you're all very much appreciated. We appreciate you very much for your participation, your engagement, and your consistency as well. I want to wish us all a wonderful, wonderful rest of the week. For the Queens, tomorrow is Friday. I wish you a wonderful session as always. And for the rest of us, until we meet again, latest by Saturday, looking forward to that session again. I hope that today's session was, you were able to take away something from it. None of these are financial advisors always. It's just use it as a point of reference to move forward and do your own further research. Don't take my word for it. Let's be critical, right? We always encourage each other to be critical. Let's use our God-given common sense and cancel all the noise and focus on what's relevant to us, and let's focus on facts, and let's move forward as a community, as a unit, until we reach beyond our wildest dreams where we need to get, right? We can only get there as a unit. We can get there together. So community, with that said, I want to wish you all a wonderful rest of your week. With that said, thank you for participating. Those who have not yet, let's ensure to engage with the tweets and also with this YouTube video as well. Once it's done, ensure to at least like it and comment what you enjoyed most about it and you want others to know about. This way, this video will reach as many people as possible, and this is how we can grow as a community. With that said, bye-bye community. Thank you for your participation. Till we meet again. Bye-bye.